Time now for a look at the latest business news and a warning from Germany about supplies of natural gas amid a payments standoff with Russia. Our business editor Stephen Carroll is here in studio with more on that story.
Sharon, Germany's economy minister has issued what he's called an early warning about a potential natural gas supply emergency. This as European buyers face a payment deadline tomorrow, which Moscow is insisting must be met in roubles. Now, the early warning from Berlin is the first of 3 stages in the country's emergency gas plan. Economy Minister Robert Habeck says supplies are safe for now, but that they're preparing for an escalation by Russia. He says that Germany won't accept any breaches of its gas supply contract with Moscow. This after a Kremlin spokesman said the payment would only be accepted in roubles. European leaders have said that payments must continue in euros or dollars as per their contracts. It's an issue that French President Emmanuel Macron brought up with Vladimir Putin in a conversation on Tuesday. He told him it wouldn't be possible for Western companies to pay in the Russian currency, but Europe relies on Russia for 40% of its natural gas supplies, and energy experts say despite other recent supply deals, European countries would struggle to replace it in the short term. Well, meanwhile, Germany's Council of Economic Experts has slashed its growth forecast to 1.8% for this year and 3.6% for next year. That's significantly lower than the 4.6% expansion that the German Council of Economic Experts had expected last November in their last forecast. The Council also seeing inflation rising as high as 6.1% this year. That would be the highest since the early 1990s. Let's turn next to what's happening on the stock markets. European shares starting the day in the red in Paris and Frankfurt. London starting the day trading flat. Investors are digesting news from Spain also about inflation. The inflation rate hitting a 37-year high of 9.8%. For the latest figures there coming from Spain. That's, of course, adding to inflation worries across the continent of Europe. In Asia, there are many gains on markets today. That's due to optimism over the talks between Russia and Ukraine, the exception there being the Nikkei in Tokyo, which finished the day down 0.8%. Let's take you next to Antwerp, which is a major trading hub for diamonds from Russia. The trading in rough diamonds has been able to continue despite sanctions from the EU, but many in the sector are concerned about their future. Our correspondents Alex Le Bourdon and Dave Keating sent us this report.
In these few seemingly banal streets, billions of euros worth of precious stones pass through each year. We're in the diamond district of Antwerp, where people have been trying to keep a low profile since the start of the war in Ukraine.
Around 95% of all rough diamonds that enter the European Union come here in this street, and about 1/3 of those diamonds are from Russian origin.
These imports are still not subject to European sanctions. This researcher works for an NGO, a member of the Kimberley process, which aims to fight against conflict diamonds. Since the invasion of Ukraine, some voices have been raised to investigate the Russian diamond network. In the crosshairs, Alrosa, a mining group more than 30% owned by the Kremlin.
There have been reports the past weeks of also more direct links of Alrosa as a company directly contributing to the military and nuclear apparatus of Russia. So these are all matters that need to be looked into in more detail.
For the moment, the European Union has only sanctioned the export of cut diamonds to Russia. That's not enough for this activist, who calls for more severity, in particular to remedy the flaws in the Kimberley process.
There are limits with the Kimberley process, in particular with regards to its definition, which refers only to the rebel groups. In the case of Russia, we are not dealing with rebel groups who would finance the conflict through the diamond trade, but with government forces.
But for this economics professor, formerly close to the diamond industry, sanctions would above all punish the European sector, which already faces strong competition from other countries.
This would only be effective when these sanctions would be adopted globally. And as we know, India, Dubai, Israel is not adopting the same sanctions. The impact of the sanctions would be that Europe loses a very important industry to itself.
For their part, the United States has imposed sanctions on imports of rough diamonds from Russia, but it's difficult to imagine a total boycott since once cut, it's impossible to know the origin of certain stones.
Finally from me, more than $600 million worth of cryptocurrency has been stolen by hackers from players of the online game Axie Infinity. The Ronin network, which operates payments in the game, says that the Ether and USD coins were removed from the system a week ago. It sent suspended transfers in and out of the game and says it's working with law enforcement and investors to ensure the funds are recovered or reimbursed. Sharon.
Stephen Carroll, our business editor, thank you so much for joining us with that.